Anthony Chicumba, it's been a rough year for specialty retailers. So which type of specialty retailers are best positioned for 2016?
I think there are two types of specialty retailers that you want to own in 2016. One is specialty retailers who have limited internet risk. Amazon is this existential threat. Retailers are continuing to struggle with that. So if you have a retailer that's insulated from that, like for example, the dollar stores where the average ticket is so low, shopping online is just not an alternative, I think that's a good place to be. And then responding to that threat, I like retailers that have very well developed omni-channel strategies. So for example, when you look at a company like Restoration Hardware, they already do 50% of their sales online. They have very sophisticated direct marketing capabilities. So I say either no internet risk or very well developed internet channels.
Well, you mentioned the dollar store, so let's start off with Dollar General. That stock's been fairly flat in 2015. What are your expectations for 2016?
We really like Dollar General. We just recently upgraded it to a buy rating, and our thesis there is that, look, their largest competitor, Family Dollar, was acquired by Dollar Tree. Dollar Tree is going to have to spend a lot of time to get Family Dollar fixed, and as part of that, they're dramatically slowing down new store openings, so that's an opportunity for Dollar General, particularly as they try to expand into new markets. They can always get that A location, and then second off, they're going to be converting a number of Family Dollars to Dollar Trees, and Dollar General doesn't compete nearly as much head-to-head with a Dollar Tree as they do with a Family Dollar. In addition to that, obviously the Fed just started to raise interest rates. Consumers feel a little uneasy right now. We think that you're going to see a fair number of consumers trade down from higher-priced supermarkets, drugstores, convenience stores to Dollar General. I think you might also see some portfolio managers trade out of riskier retail stocks to a more defensive place to hide like Dollar General.
And you mentioned Restoration Hardware previously. That stock's down around 15% so far this year. About a third of the shares of Restoration Hardware are sold short. So there's a lot of detractors on Wall Street. Why are you a proponent?
Well, I think that a lot of the detractors are really kind of missing the forest for the trees. I mean, all the Restoration Hardware has to do is continue to essentially replace these small kind of 7,000 to 10,000 square foot mall-based locations with these much larger stores, 40,000, 50,000 square feet. The larger store, it acts as marketing for the Restoration Hardware brand. It also allows them to do true lifestyle merchandising, whereas you walk in different rooms within the store and it looks like a bedroom, it looks like a living room, it looks like a dining room, but everything's on sale. And it really allows for incremental purchases because the consumer sees how this sofa will work with this lamp, will work with this end table. In addition, these larger stores allow Restoration to just plain stock more merchandise, and they find they get anywhere from a 50 to 100% sales lift when they have an item at retail as opposed to just in their catalogs and online.
And then finally, you're a fan of Best Buy. That stock's down around 20% this year. Last January, it really fell off a cliff from 40 to around 25. What makes you so sure they're not going to have problems again this January after the Christmas selling season?
We really think that Best Buy is well positioned for the holiday selling season. We think that 4K TVs, Ultra HD TVs are at the top of a lot of consumer shopping lists. Best Buy has a third domestic market share in televisions. We also think that Best Buy is going to sell a ton of wearables, a ton of appliances, and they're just executing much better at the store level and online. We also think that there's a good capital allocation story here. They're building up cash on their balance sheet. We think they're going to start to really aggressively buy back stock, and they pay a nice dividend as well.
All right, well, thanks a lot, Anthony.
Thanks for having me.
Great stuff, and thank you for watching The Street.